I have absolute conviction that Bitcoin will always be worth more in the future than it has been worth in the past. So we're focused on increasing the amount of Bitcoin that we hold on our balance sheet.
Hello, you're watching Proactive. I'm joined by Connecting Excellence CEO Scott Ellam. Scott, very good to speak with you. You funded this Bitcoin acquisition purely from surplus Spencer Riley cash flow. How does this steady operating cash de-risk the strategy for investors?
Well, we've got a largely uncorrelated operating business to the Bitcoin market. So the business model attract talent who are generating revenue in any industry that they're experienced in, and they might be billing and generating 300,000 or 500,000 pounds per annum, and then using that surplus cash flow in to buy Bitcoin. So the benefits to the investors and the shareholders is that in an extreme bear case for Bitcoin and the capital markets, if we don't have access to the capital markets, we can still provide an increase to the Bitcoin yield and purchase more Bitcoin with ongoing cash flows. And I believe that makes it a compelling opportunity for investors to rationally expect a limitation to the downside volatility of Bitcoin, but still benefit from the upside.
It seems Spencer Riley's had a strong start to the year. What caused the higher than average revenues this January?
I think there's been quite a high demand for talent in our core operating businesses market. So AI intelligent systems, logistics. We've had some senior appointments made with one of the big four over in the USA. And then one of the largest business advisory consultants in the world has made a very senior appointment as well, all through us. So it's uncorrelated demand for senior level talent in our core industries that's driven that revenue.
You describe Spencer Riley's revenues as largely uncorrelated to Bitcoin price moves. How does that separation shape your ability to keep accumulating Bitcoin across different market cycles?
Well, we had a 30% plus revenue growth year on year over the last 4 years, and we started buying Bitcoin in 2021. So we've been through a cycle where the Bitcoin price has tracked down significantly, and we've bought all the way through that cycle. And at the same time, our revenues in the operating business were going up. So in some respects, there's a negative correlation in that we can acquire more Bitcoin by increasing our revenues at times when the Bitcoin market is not as positive as the recruitment revenues. And it just provides a really strong balance. And I think from a long-term outlook for 8 years' time, I think that'll be a strategy a lot of businesses do adopt.
And how do you decide between reinvesting in recruitment or buying more Bitcoin, Scott?
So when it comes to investing in recruitment, a typical member of staff who would be joining a business would be in our industry on quite modest basic salaries with high commissions. So from a cash flow perspective, they are sending invoices, we receive the cash, and then commissions would be paid out. So it's quite a cash resilient business model in that, from a point of view of increased costs, they only come when the revenue's increased and the cash coming into the bank account's increased as well. So we want to attract talent, but we have other means than cash. And that is, we've got a business where you can imagine each individual recruitment consultant in the business, they've got long dated performance based share options. And those share options are tied to their personal drive to increase revenues and profits and grow the operating business, but also that makes us more attractive to the capital markets to increase Bitcoin per share. And we're anticipating a 30% compound annual growth rate to Bitcoin over the next 4 to 8 years as well. So with performance-based share options like that, we're able to leverage those to minimize the cost upfront for hiring talent.
I mean, just going back to your previous answer, Scott, when you're talking about the Bitcoin cycles, we've seen some volatility, particularly over the weekend, metals prices as well as Bitcoin. Do you look through the current noise and the current volatility when you are investing in Bitcoin?
I have absolute conviction that Bitcoin will always be worth more in the future than it has been worth in the past. So we're focused on increasing the amount of Bitcoin that we hold on our balance sheet. And I also have conviction that in the future, that will give the business far more opportunities to leverage the balance sheet and look at other capital markets, innovative products that allow us to accelerate the Bitcoin per share. And in our industry and executive recruitment, I think there's a little bit of a winner takes most over the long enough time frame, because there's three outcomes. There's competitors' highest performers want to join the business that can offer the best returns to the employees over a 5-10 year period, or our competitors want to join the group, or our competitors compete with the same strategy in the future. So we're not worried about short-term volatility. I'm more focused on making sure that we can increase the Bitcoin that's held. And I think that should probably be applied to gold and silver. We're going through a situation where global macro events have meant that there's been some quite wild swings in some very established asset classes like gold and silver. But the reality is, the people who are investing in those assets, if they've got a 4 to 8 year time frame, it's a very similar concept to investing in Bitcoin. And I wouldn't suggest trading any of them in the short term.
Scott, as usual, thank you very much for your thoughts and insights. Good speaking with you.
Good to speak to you, Stephen.
Scott Allen, the CEO of Connecting Excellence.